Welcome to the Square Exchange community. In this session, we will be looking at the technical strategies required to create profits by using Fibonacci levels. Before jumping into the topic, I would like to ask you guys to hit the subscribe button, as that will be the most convenient way for you to follow what we are doing. The two Fibonacci retracement tools that we will be discussing in this training video will be the Fibonacci retracement tool and the time-based Fibonacci extension tool. Both of these indicators are derived from the Fibonacci numbers, and I'm guessing you must be wondering what Fibonacci numbers actually are. This is a sequence of numbers developed in the 13th century by an Italian mathematician who was popularly known as Fibonacci. It is a series of numbers in which each number, or as we can say, each Fibonacci number, is the sum of the two preceding numbers. I will not bore you with the extensive information on these numbers. However, I will introduce to you the initial part of the sequence and help you calculate the golden ratios that are used to create the technical indicators. The initial part of the sequence is as follows, and the calculations are entirely based on this sequence. To start with, you can choose any number of your choice, and in this case, I will be taking the number 144. Now, the first ratio can be easily calculated by dividing the number of your choice with itself, which in this case will be 144 divided by 144, which is equal to 1. The second ratio can be calculated by dividing the preceding number in the sequence with the number of your choice, which in this case will be 89 divided by 144, which is equal to 0.618. The third ratio can be calculated by dividing the number that is 2 spots behind the number of your choice, which in this case would be 55 divided by 144, which is equal to 0.381. And if you continue the trend, the final ratio will be 34 divided by 144, which is equal to 0.236. As you will see on the trading charts when we apply the technical Fibonacci indicators, that these ratios are the golden ratios and are of utmost importance while calculating the support and resistance levels. I wanted to introduce the method of calculating these ratios because these golden ratios have been used to create the quantitative technical indicators that are inbuilt in the trading platforms nowadays. So let's jump right in and start creating the support and resistance levels by using the Fibonacci retracement tool. The Fibonacci retracement tool reveals the hidden support and resistance levels on the trading charts. And finding these levels can help us to analyze entry points, determine stop loss levels, set price targets, and evaluate exit points. We will start by taking the example of Agilent Technologies on a 1-hour time frame. I will suggest you guys to pay close attention on how to draw the Fibonacci retracement levels. You must start with the highest point attained by the stock before the bearish trend reversal and should place the ending point at the lowest point attained by the stock before the start of the bullish trend reversal. And this will give you the various Fibonacci levels which will act as support and resistance levels post the trend reversal. So as you can see in this example, the 0.23 ratio has pretty much acted as a major support level, with the 0.5 ratio acting as an important resistance level for the initial part of the bullish trend. However, once the price broke through the 0.5 ratio level, the 0.78 ratio level acted as an important resistance level. And once the price actually tried to break through it, and there is this false breakout that we witnessed over here, the price eventually fell down and started to rise up again before finding another resistance level at 0.78 ratio and falling down and eventually breaking through the 0.78 ratio level and giving an opportunity for a big bullish uptrend. So as we can see, during the far end of the bullish trend, we could see that the 0.5 ratio level acted as a support level and the 0.78 ratio level acted as a resistance level. So with that being said, as we can see, Fibonacci levels can actually be used to find important hidden support and resistance levels. They also help us to identify entry points. So as you can see, the trade never really fell below the 0.23 ratio level. So as you can see, a smart trader would have drawn, a smart trader actually, once noticing that the price is actually not falling below this level, he would have drawn the Fibonacci retracement levels to find what would be an ideal entry point for the trade. And he would have realized that post the breakout from the 0.23 ratio level, the price literally shot up. So he could have used these two candles, these two big bullish candles, to be his entry points. And as a fun fact, the Fibonacci retracement levels can also be used to identify and determine stop loss levels. So as you can see, after the price broke through this level, the stock never really fell below the 0.23 ratio level, which could have acted as a major stop loss level for him. With that being said, a smart trader who would have not thought of keeping the position for that long, could have realized midway through the bullish uptrend that the 0.78 ratio level is acting as a major resistance level for the stock, and it is unable to break through it. So he could have used these candles, or even these two candles, these 3 or 4 candles over here, to square off, and this alone would have been a trade of between $10 to $11 per share. With that being said, for a bullish uptrend, we can also use the same chart to take an example of a bearish trend reversal. Let me quickly delete these resistance levels so that we can take the bearish example as well. So as you can see, there was a big bullish uptrend all the way till here before, which was followed by a short bearish reversal. So in such a case, you can actually create the Fibonacci levels to forecast the depth of the bearish trend reversal. So let's create the Fibonacci levels and try to expand them as much as possible in order to find the important support levels and identify where the breakout could have actually been. So as you can see in this case, so for a smart trader who would have used Fibonacci levels after the price hit this low and rose up again, he could have identified that the levels between 0 to 0.236 ratio levels are acting as big support levels for the stock. And with our understanding of support and resistance levels, I would say this could have acted, these two positions actually could have acted as the major support levels for the stock. And what he would have actually realized that ever since the price hit these two levels, it literally shot up. And you can also see again over here, the 0.38 ratio level acted as a support level, followed by the 0.5 ratio level acting as a support level as well. So hence giving us an important lesson that Fibonacci tools can be used to forecast reversals and analyze and identify support levels for your existing positions. So for example, if someone would have actually placed that trade all the way from here, he could have easily identified these important support levels and could have managed his mid to long term positions in the stock market effectively. With that being said, I will now be moving to the 1-day time frame to explain the time-based Fibonacci extension tools. So drawing the time-based Fibonacci extension tool is similar to the Fibonacci retracement tool. The starting point must be the highest point attained by the stock before a bearish reversal, and the ending point must be the lowest point attained by the stock before the start of the bullish trend reversal. And once we zoom in, what is it that we can see? I will use my brush to help us identify this, that with these being the Fibonacci retracement levels, what we identify is that whenever the price hits the time-based Fibonacci levels, either there is the start of an uptrend or the continuation of an uptrend or a price consolidation. So as you would see, the price starts to rise, there's a price consolidation, and it continues to rise till there. And after that, while it still continues to rise till here, there's a short bearish trend reversal, and it starts to rise again. So as we can see over here, that it is clearly identifiable that every single of these Fibonacci time-based Fibonacci levels are are actually key to understand the continuation of an ongoing trend or a trend reversal in each case. And interestingly, if you would notice the bottom of the screen, these time-based Fibonacci levels are also calculated using the golden ratios, which I had actually used while giving the presentation. And this actually brings forward an important lesson for us that if we use the time-based Fibonacci extension tool, we can identify the key periods of time that can be used to identify what the next trend might be doing and helps us to be vigilant of the start of a trend reversal or also the continuation of a previous trend. Let's quickly take another example, say Netflix. So if we take the example of a short bearish trend, as that would help you analyze the fact that irrespective of the time frame, the time-based fib extension tool successfully works. So we will be using the same strategy of starting with the highest point attained by the stock before the bearish reversal and the ending point being the lowest uh, point attained by the stock before a bullish reversal. So as we zoom in, um, we can see a similar thing as well as we saw in the previous example. What we see over here is that this is the point of the start of a trend which consolidates over here, then another trend followed by a trend reversal, then the continuation of a trend and another trend over here. Um, so as we see that irrespective of the time frame and no matter how short our time-based fib extension tool is, the levels do not disappoint. They always help us to identify the time periods that will either be either be playing a vital role in the start of a trend or pretty much the consolidation of the ongoing trend. So let's also take an example of a bullish uptrend which is followed by a bearish move. So as you can see over here, this is again going to be a shorter example to explain you that irrespective of the time frame, the the time-based fib extension tool is going to successfully work. So in the case of a bullish trend, we will be starting with the lowest point attained by the stock, and the ending point would be the highest point attained by the stock before the bearish reversal. And as on zooming in, we can see that I'll be using my brush again to help you identify that this point acted as the continuation of the trend and it continued to go further down and then somewhat of a consolidation and somewhat of a rise and then a consolidation. So, well, actually, my bad, that would be the start of another downtrend. So as you can see in this case again that the time-based fib extension tools are calculated using the same golden ratios, and the mysterious and funny fact being that they do not disappoint. And the most important quality of this tool is that it helps you to indicate the time periods where you as a trader need to be more vigilant. It helps you increase the size of your portfolio because you don't really have to constantly keep tabs of the price, because I would say that 1, 2, 3, 4, and 5. So if there's a gap of 5 candles on a 4-hour time frame, that gives you a time of 3 days where you don't have to worry about the stock because you know that it's going to continue following the trend once it has. So in such a case, I would say that um, identifying the trend and being able to successfully draw the time-based fib extension tool can be a great asset for a portfolio manager or a day trader who's trying to manage his funds and his investments actively, and can help him give enough and can help him have enough time on his plate to evaluate more number of trades. Well, that's all we have on Fibonacci retracement tools for now. We will soon be releasing a video integrating the support and resistance levels, trend lines, and Fibonacci retracement tools to give you a readily available strategy to create weekly profits. So subscribe to our channel so that you don't miss out on our next video. Also, if you guys want us to create videos on any specific indicators or strategies, please leave a comment in the comment section and we will be happy to do so. Thank you for watching.